Good day, Warriors. Day before NFP. How's everyone doing today? I also want to welcome our viewers from investing.com. Thought I'd start in your wheelhouse. I know most of you, a lot of your content on investing.com is stock related. So I want to show you that the champion is not making new highs along with the market making new highs. The Amazon yesterday was down fairly sharply, and that was with the market being higher most of the day. So you do have some deterioration of breadth in the fangs and other parts of the NASDAQ 100. Another example would be Microsoft, which looks pretty toppy to me. We're close to new highs, but diverging. There you go. As you can see, we're not confirming these highs. Has a kind of a rising wedge look to me. Also, one of the weaker groups in the markets came to life a little bit with yields exploding to the upside is the banking sector, but let's see if there's any follow through. I mean, it's very possible that that rally right up here is a failing rally. And if the yield curve continues to narrow, there could be some more trouble in the financials. And may as well go to the recent champion making new all-time highs is Apple. And here's Apple's look on a weekly. The weekly is diverging from the previous high, but even more glaring is the daily. So as you can see back here, we had momentum and price confirming this move. The ABC flag breaking out to new highs, but I would at least be taking profits, maybe not shorting it, but even Apple is showing momentum beginning to fade. Okay, so be careful with stocks on a weekly basis. We have the S&P beginning to show some signs of a top. I think it's all going to come down to how markets react to the NFP tomorrow. But I was talking early in the week about having an off number, which is you just go to a weekly chart and you count back 2 weeks. And for us to have a 2-week reversal in S&Ps, by tomorrow's close, we need to close underneath 29.90, which we're 19 handles underneath right now. If we take out last week's low of 03, you could actually have some type of key reversal here. The Dow has been the strength, as people do not, when they get out of one sector, they don't get out of stocks and into cash or into anything else. They rotate into another sector. And really your weakness is NASDAQ 100 already showing a reversal week. Why not a quick flush that would not really affect the bull market to 69.20? My real bear scenario would be all the way down here, but short looking at 69.20 to go to the door. There's a new kind of, I don't know what you call it, kind of a new cheer that the Dixie is the new VIX, and the Dixie's acting pretty strong. I think exceeding this 95.5 level was pretty important. If you just do an arithmetic measurement, you have 170 pips. That would take it to 97.20, which would be above this high. Maybe we're going to get some type of panic if that happens. And something I've been talking about, it hasn't happened yet, but I think it will. Chinese are trying to possibly hold down this yuan. They said they would not weaponize it. There's a nice down candle. But having been a commodity trader for over 3 decades, when the Chinese said they were buying something, they were mainly putting that news out to liquidate. And when they were not buying or selling, they were accumulating. So I think there is a chance that they do weaponize the yuan, and that would mean, you know, trading back over 695. The lira, which has been one of our currencies in the globe that gave us some trouble, kind of moving sideways. I still expect the lira to have some troubles down the road. And we had a decent week in gold. You know, we did come off yesterday, but we've had a nice $23 rally in the gold and the precious metals. It's going to be pretty important how it closes, but I can't say it's done anything wrong. You know, we pulled back a little bit, but a real nice day here in gold. Okay, so we bottomed at 1160 in a panic down here, and it happened in Asia. And then I was talking about 61.8, which happened to come in at 1181. That was really it. So if you do your work, you might have to be patient and wait for your numbers, but it got there. And then early in the week in face, I was saying back in here, this pullback to be a buyer, and this was on Monday. So nice trades. Gold's not doing anything wrong. The COT on both gold and silver, commitment of traders, is very extremely bullish because of all the short positions. Shorts are going to try and defend gold from taking out these highs, but I really expect the short squeeze to begin in earnest over 12.12. I have a great guest for us today, Adam Button from @Forex Live, @FX_Button is real good with seasonals, and he's going to be our guest here today. Everyone who's asking about Steve, keep good thoughts for Steve, hoping he gets some relief from some back issues, and looking forward to having a great session. I usually don't do a lot before the NFP, you know, because I like to be flat before the NFP on a majority of my positions, at least leveraged positions, maybe not ETFs, but leveraged positions. So I like to react to the reaction and know what I would do after the number. So, you know, you do your preparation. If we get a strong NFP number and the dollar continues to rally, is that a possible fade for a scalp by selling into dollar strength for a trade? So that's my look, and stick around for Adam Button. He'll give you some ideas on the seasonal. We all know everyone's eyes are really on oil now. You're starting to hear a lot of big high targets, you know, $100 crude. When you look at it, though, that's the NASDAQ. The crude actually has kind of a 3 drive to a top formation, but because the geo stuff that you really can't control with charts, I can't short it here. So maybe we are going to get you know, some type of action in the Strait of Hormuz. It would be $100 overnight, so I'm not going to take the risk. You're either long or out in crude. To me, it's almost like shorting calls with unlimited risk. So that's my wrap on the markets right here. I'm getting a lot of messages from my team. I think we have one of the best teams in the business. Here we are. I'd like to introduce him to you. Blake Morrow. Blake is, you know, very popular because of his great eye in the market, and he's a longtime veteran. Has taught many traders that are now successful in their own right. We have Greg Horvat, who keeps winning award after award. Someone's cooking breakfast for me right now. That's what a great team we have. Greg was awarded best analyst, I believe, sell side at FX Street many times. Stelios used to trade huge in the LIBOR, and he does our macro stuff. Steve's one of the most disciplined traders I've ever met. There's me. So we have this free webinar that's sponsored by Forest Park FX. So if they're kind of our community solution to finding the right broker to for people to execute with, or finding an additional broker. Joe Perry's been with us, I think, about 6 months, and he's a regular now on Bloomberg, and you know, he's made some great calls on live TV. Yeah, what a great spokesperson we are, and if you were here an hour or you know, half an hour ago, you're hearing our new program, the European Crossover with Paul Franco, and a great cable trader, Amanda Sweeney's in our private member chat, facilitating the room and sharing her ideas. All her trades she makes public in there. Andre's an artist and an analyst, so he's an analyst artist with his harmonics, and I've seen him really pick up some great trades based upon his harmonic patterns that he's an expert in. So what I would recommend is we have a trial here. So you could go, you know, just here to home or click it on the website. You could check us out for 10 days. It's near the end of the week. This is a good time to do it. So you get used to navigating it. With this, you'll be able to go and hear Paulie in the morning prior to face. And you could be in the members chat for when there isn't a webinar running, and we have well over 100 professional type traders that trade for a living in there and are very supportive and share ideas together. So I recommend that. Here's my recommendation for today: risk a buck. If you really feel like you got overcharged for that $1, send me an email and I'll mail your $1 back to you. But I think with what's happening in October and some of the things that I've shown, you want to have a team on your side. Also, we have all the apps, so you're not locked into being home every morning, every afternoon, every night. We have phone apps, we have iPad apps, so we're portable. So you could take the whole team. Ladies, you could put us in your purse, and guys, you could throw us in your pocket, huh? You don't want to be in. You don't want to be in a purse, man.
No, I think
you are. How long have you been married? Huh?
15 years.
All right, you're
15 years. Matter of fact, I'll be in wine country actually in 3 days from now.
Congratulations.
Celebrating the 15 year. Thank you.
You know, in the modern era, that's kind of like 50 years.
Yeah,
in the old days.
It's true. It's amazing how many, how many parents are split up as my kids get older, and I'm just surrounded by other kids and parents, and it's amazing how many divorces there are.
You know what? It's kind of like people give up. Okay, it's like that in trading too. Okay, it's work, and and when things become not all a bed of roses, is when you fight harder for it, and you do the same thing in your profession.
Yeah, and exactly, and when you talk about trading and you talk about trading the markets, I mean, I've been doing this for this is my 23rd year of trading and 25th year in the markets, and I'll tell you, it's not easy. It is work. I spend a lot of time in front of the computers. Now, what we aim to do is hopefully make life a little bit easier for you and help you cut some corners. Your learning curve isn't quite as extensive as, some people. Like if you take, Dale, when you and I started trading, and especially when you started trading, years before me, there was no education, there was no support, you kind of figured it out. You just had to figure it out. And those of us that were lucky enough to survive, live to tell the tale. But now there's a lot of different outlets and ways that you guys can learn the markets and help navigate and have good teams. And I'll tell you, it's a much
more discernment now more than ever, Blake, because there's also a lot of sharks and barracudas and charlatans out there. And one of the hints is anyone who's trying to sell you, I have the secret for trading. The secret is it's hard work and persistence and living through stuff. That's the secret. There is no secret, Anyway, that's the end of my speech.
That's I appreciate it, and I'm sure everybody else appreciates it too. I'm going to take over from here, and Dale, thank you for being such a great host, interviewer, and and market expert. It's great having your knowledge here too.
Thank you, buddy.
Before we've got actually a couple of team members that are coming in today. You guys are in for a really big treat. Not only do we have Adam Button from Forex Live, and I'll tell you what, Adam is one of the smartest guys in the currency market. He was originally, I believe, and I'm 90% sure, I believe he was a Reuters reporter, years ago, and before he took over Forex Live, and he's just one of the sharpest minds out there. And so if you guys are in for a really great treat, because he's not on our team, so to speak. He's with Forex Live, but Dale always brings in great interviews. But we have Gregor Horvat, who's going to be here in just a few minutes. Yeah, he's going to talk about some Elliott Wave setups in the FX market, and then we have Andre, who is our in-house harmonic expert, who's got like 3 different setups that he's going to show you guys. So I don't have a whole lot of time to speak, so I'm going to talk. I'll be here, but I really want to talk about a few things. First and foremost, let's talk about the euro. So the euro has been, and I'll tell you what, the euro has been a really difficult currency to trade. There's been a lot of setups, and I'll just kind of.
I have to acknowledge your trade. You tweeted, and yesterday during Face, you were negative the euro. You said, I think we're, the 115 bulls are in trouble. We could head towards 1570. Great call, Blake.
Thank you. And that's just par for the course, because we've had such, just really difficult times as far as trying to develop certain setups. Like
that's a birdie. That's a birdie, not a par. All right.
Thanks. so here's like the head and shoulder pattern. Didn't complete, right? Didn't complete. You have a longer term head and shoulder pattern that may be ruled out if we get much lower than where we're at right now. But the move below the 618 yesterday really took out stops, and I knew that was going to, once we came through 115, I'm like, okay, we're going to take out stops. Now the problem is that we are entering a period, and you might go, whoa, that's it for the euro? Yeah, because we might be going into a period where we're seeing a little bit of risk aversion. All right, now, if you're a ForexAnalytix subscriber, and if you're not, I'm gonna give you guys a little bit of a gimme today. All right, these are our patterns in play. Patterns in play are basically setups that we as a team identify as. Hey, Grega, I think Greg is here, or is that Stelios? Oh, yeah, Stelios. I don't know. I thought I heard Grega. Anyway, this is a setup here that is basically, these are setups that we see as, by the book setups, and we identify them, and we have, by the book. We have an ascending wedge in the S&P that's breaking down. This would be a theoretical entry if you're, trading it. And this would be the near-term target. This would be the invalidation point. So basically, by the book, here is an ascending wedge that we have identified, and I pulled it out this morning. We bounced right back to the underside of the trend line, so I initiated it an hour ago, and now the targets are 2860, which is going to be right here, which actually I can extend further to. I just kind of that's like more of an initial target, because we can adjust these targets as we go. But that 2860, well, 2850 basically is the 38% retracement. 2860 is going to be a pretty big support there. But if we get to that and we break it, or we look like we're going to break it, I can actually adjust those levels as on the fly. Excuse me. But the fact of the matter is the S&P is actually starting to show some signs of weakness, and these are the types of things that, if you're a ForexAnalytix subscriber, you get you get these as they come. Now we have not all of them work out, obviously, but those are just some of the things that you'll see as a ForexAnalytix subscriber. So it as Dale said, you should try it out. It's a buck to try it. Anyway, I'm going to go back into these charts. So if we have the S&P that's starting to break down, one of the risks now is that you're going to see not only yen strength, but which some people go, okay, well, maybe we'll see some yen strength. But the problem with the yen right now is the bond market is so weak. You got bonds, and this comes into the blog that I talked about on last Friday. Record shorts. I got to show you this. This is our chat room. I'm gonna hold on. This is our chat room. Hey guys, you guys are going to be on Jumbotron here in a second. I want to pull up a list, and I'm going to go to yesterday. Wherever yesterday, what's today? 4th. Gosh, it's 3rd. So I'm looking for Benedict B-Dubs. He posted this as a really good chart here from Bloomberg. Oh no, that's the 10-year. No, gosh, we post so many charts and so many things here. So where the hell is that? Okay, I must have skipped it. Looking for, this is a 10-year versus the, oh, here it is. CFTC commercial shorts in the 10-year. Look at this is a record short position in the 10-year. You notice right now that the 10-year is ripping. Well, it's ripping. I say it's ripping. It's bouncing. Yields are falling right now. There is an extreme risk at this stage in the game that bonds start to bounce. Now, if the bond market, let's go over to the bond market. If the bond market, which is just near the 127% extension, we just stopped out all the longs. If we bounce here aggressively based on risk aversion, guess what's going to fall? The dollar yen, typically. Now, the BOJ just announced about 30 minutes ago. Let me go to live stream. BOJ seen tolerating yield rise via Reuters. Okay, that gave a nice little. Whoops. Okay, damn it. I have to look at the Canadian yen here. Oh, the Canadian yen's breaking lower. That's why. So, sorry, that's the only way I can get rid of that alarm, is I have to refresh the page. It'll shut off after 60 seconds, but Canadian yen's breaking down. Okay, so the dollar yen, okay, spiked down because of that news story right there. All right, this is about 30 minutes ago, and you got to watch the dollar yen. If the dollar yen gets below 114, things are going to get a little scary for the yen. Now, with the rise in bond yields, and the S&P is starting to take notice, and the rest of the stock market, I put up this picture here. This is a picture of Wile E. Coyote. I think the market is at risk of having a Wile E. Coyote moment. You guys remember the old Wile E. Coyote cartoons when he would be chasing the Roadrunner and run right off the cliff? Roadrunner would stop and he'd run right off the cliff, right? He did that every cartoon, I think, if I'm not mistaken. Well, guess what? The S&P, or the stock market, when yields start to rise and the Fed starts to shrink its balance sheet or get to neutral, the risk of the market having a Wile E. Coyote moment is quite high. And showing you what I just showed you with the S&P, in breaking lower out of an ascending wedge, the risk is we're going to have that Wile E. Coyote moment off the ledge. I wouldn't get too terribly excited about the stock market unless the S&P drops below 2,900. But below 2,900, things might start to accelerate. So I think if you're bullish the market, you really have to be on guard so you don't go flying over the ledge. And by the way, this is our private chat room for ForexAnalytix subscribers. Guys, say hi. I'll let you guys. There's 100 of us in there right now. You guys can all say hello. I'll let you guys say hello on Jumbotron. You guys are on Jumbotron. You know, when you're at a TV sporting event and you're on the TV. We got a lot of great traders in here. I wish I could just single out a bunch that are just the best, but really we've got so many great traders in here that have, and a lot of these guys, I've been talking with them for over 10 years. That are actually in here right now that have been in this chat room. So we've many of us have been chatting together for 5, 6, 10, even more years than that. So it's really nice to have everybody. Oops, here's new messages. Sorry, Amir. It's like a prison here. Alex says I'm not one of those great traders, and not everybody's going to be a great trader, but there's a lot of cool ones in there. All right, anyway,
surround yourself with traders better than yourself.
There you go.
I teach.
Important.
Yeah.
So I heard Stelios's voice, but
I'm here.
Grega is here. Hey, Grega. Hey, before I let you take over, and everybody's excited to see all your Elliott Wave setups, I just wanted to make sure that I mentioned, I talked about the euro. Oh, here's the dollar index. So I just want to mention this really quick. The dollar index broke the 618 yesterday, and if you're a ForexAnalytix subscriber, you already knew that we were going to bounce right here. The reason why is because we had this dollar index basic technical analysis right here that came out that we're going to be bouncing right here, and the dollar index is already starting to show a bounce, and that was 39 minutes ago at that intraday update right there. It has pulled back to the breakout point, which should allow for a bounce from the 95.75 level for a continuation higher, and that happened about 30 minutes ago, and we're already bouncing.
Some people don't know that you get those alerts are pushed on your screen, on your phone, anything that you're using. You're aware of it, so you don't have to be watching and then catch it.
Yes.
You know what I mean?
Everything here that you see, well, on the update history, so whether it's key levels or basic technical analysis or new patterns in play, if Grega puts them out or I put them out or any of our team members put them out, those get pushed to your mobile devices if you're on the go. I have mine pushed to my desktop, mobile device, and email. So no matter where I'm at, I'm getting notified unless I'm sleeping. So and you guys can have that too. And I don't know any other company that offers a mobile app. As A offers a mobile app, B offers a very intuitive mobile app. Is really the most intuitive mobile app I've ever used, actually, market related. And so you guys get that as long as you're using an iOS or Android operating system. I don't even know if there's any other operating system. Anyway, enough of that. I want to hand it over to Grega because I know Grega's got some setups here. You've got some great patterns in play working here, Grega. So I'm sure you got a lot to talk about. How are you doing today?
I'm doing fine. Very good,
awesome.
Actually.
Awesome.
Waiting and excited to see how non-farm payrolls report will shift this market around.
Yeah, I think. Yeah, and I'm usually one of those people that think the market's probably going to be pretty quiet till non-farm payroll, but in all actuality, we have we have a lot of volatility potentially because of what's happening in crude, what's happening in, and by the way, crude just hit as everybody should know, we hit the weekly 618 retracement in crude just yesterday. We have big moves in silver, gold, S&P, the bond market, the dollar index. So I'm not expecting low volatility between today and tomorrow. I'm expecting actually a lot of position squaring. So it's going to be probably some good volatility for the day. But what are you looking at? And I'm going to pass it over to you, Grega, so you can show us what you're looking at here before Andre gets here, which he should be here in the next 15 or 20 minutes as well.
Yeah, sure. Okay, so firstly, what I think we should pay attention on is probably 10-year US notes. Okay, we have been rallying last week after the Fed, but notice that the resistance was found here at this former swing low. So we have been looking for another drop here, which caused even lower Japanese yen. So at the bottom I have yen futures, but since we have 5 waves of decline, okay, right from a triangle that was placed in a 4th wave, I would not be surprised if we see a reversal of this trend. So in my opinion, at least 3-wave corrective recovery will occur and may take us back to this area for wave 4, which was at 119. So in that sense, we could see a pullback on dollar yen, okay, and If we go to dollar yen, what I'm looking at is actually a 5-wave movement within wave C. And to give you a better perspective, here's this 5-wave movement, okay? It was a move out of a big consolidation of a triangle pattern. So here we have also 5 waves to the upside. And 10-year US notes are going to rally, at least find some support. I think that this dollar yen could easily come much lower. I will definitely be looking for a retracement back to 113 area. This was also this old swing high from July that we broke above it last week actually. So I'm looking here as well for potential weakness that could come through. Of course, for a completed or confirmed completed 5-wave rise, you would have to see this channel broken. In such case, this impulsive channel would tell us, or Elliott wave channel would tell us that 5-wave movement, 5-wave structure within wave C is completed, and that we are stepping into a new bearish cycle. Maybe just temporary, but still I would be looking for a reversal. Also, in line with this, I would also touch euro dollar. Now, euro dollar made some, what I think are some interesting failure push here, firstly to a new high above 1730, and now we have maybe a very similar situation here below 1520. So what I'm looking at is that actually how market will respond here at this very important 61.8% retracement. So as you can see, I didn't took the distance of the whole recovery, okay, since I'm tracking wave B, but I took a distance of wave A, because this was an impulsive reaction, while this move to a new high was part of wave B that I'm tracking. So that's why I think that this level is still very important, and in fact it could be treated as a failure push to below this level, and that could actually cause a bounce. If we will see prices rising, and maybe tomorrow after non-farm support, if we see a bullish close, maybe a push back towards 1.16, I would be very confident with this wave count and would be looking for much more higher prices. At the same time, of course, this would make sense what I just talked about on dollar yen and the 10-year US note. Okay. Also, if we consider here what I'm looking at on daily time frame, is that I want to see a retest of this trend line. Okay, so keep in mind that I'm looking here for potential completion of a wave B pullback and expecting a rise for a wave C. Well, this would be matching up very nicely with this trend line that was broken with a triangle formation here at the end of July. But normally important trend lines can be retested. So I will not be surprised if this corrective recovery is still ongoing. Also, if I take a look just at this rise, it was somehow very quickly unfolded. If we consider that we are in a wave 4 of a higher degree, while previous wave 4 was much more complex. But if we are in a wave 4 of a higher degree, then normally this may take longer in time, or at least deeper in price pullback. So in my opinion, I still think that we could see another retest of these levels. Okay, so I'm looking for 1870 retest, maybe even for a push towards 1.2 level. Also, this comes in very nicely with, I don't know if I have it here, yes, with this head and shoulders pattern. Okay, I'm looking for another recovery here towards this upper trend line of this, which is actually parallel trend line of neckline. And once again, we could be stopping out at these levels around 1.1870 up to 1.2 level. So overall, when I'm looking at these markets, I really think that I would not be surprised if we see dollar coming off a little bit. And of course, this would be from a trading perspective, or maybe even for some who are looking for longer term investment, even better opportunity to catch the euro weakness, which after all is underway away from 2018 highs. But I just think that this pullback could be a little bit deeper, more complex, which may cause a lot of confusion in these markets.
Yeah, I was going to say, as you know, as far as the euro dollar, would that last move higher, the one that was to one about the 118 level, would that qualify for you as far as already tested the underside of that trend line that you're talking about? Is it possible?
Yes, around. You mean if that's possible already as completed?
It is already completed. Yeah.
It's possible, but because of 10-year US notes, because of dollar yen,
yeah,
and because of those completed cycles, or at the end of those cycles that we are seeing right now, I just think that we may see a retest of these levels. But it's a very good point that you asked me this, because even if I'm wrong, even if we say that top is here in place, okay?
Yep.
And that we are now going to see more weakness like that, okay? Straight down, we still need, I think, a pullback, okay? So as I said, on 10-year US notes, at least a three-wave rally will occur. And with that in mind, if we take a look on this 1 hour chart, we have 5 waves of decline. And these 5 waves of decline are from that level, 1.18 level, okay? So if you consider that we have 5 waves of decline on hourly chart, you would still anticipate a bounce at least in 3 waves, right? So
right.
I still think that we will see a recovery, a stronger euro. The only question is if this recovery will be acting impulsively, very strong, or will be slow, choppy, overlapping, which means it will have a corrective personality. We also have a divergence here, or on the RSI as well. Few levels are here. 61.8%, as I said, was tested. So even if my, let's say, midterm prediction is wrong, the short term, okay, should still see at least a 3-wave corrective bounce, something like that. Okay, back to this area of a former wave 4. But if we see a first leg very sharp, okay, and impulsive, then I think this will be part of a much bigger recovery for the euro. So in the short term, I think that euro can be coming in a little bit stronger. Also, what is interesting, that gold, despite that lag down on euro dollar that we are seeing, gold is again doing very well. It's holding a support. We see also silver doing very well. So it was the same thing already last week. Euro dollar came down very sharply. Gold was doing quite well. Silver as well. So I think that if we will see gold breaking out to the upside, which I still think it's possible because of very nice 3-wave setback that we've seen, and once again towards 61.8%. So you can see how this level is important actually, okay? 61.8%. So I'm looking here for a continuation to the upside, which after all could help euro dollar to find buyers as well. So definitely, as I looked at this, a lot of markets combined, even crude oil, I mean, it's very bullish. Clearly, it may be the euro that will catch a bit with a delay, maybe. So.
Okay. All right. Fair enough. Okay. Thank you.
Yeah. Great jigsaw puzzle presentation, buddy.
Thank you, Dale.
I'm clear.
So, we have Andre around, or I have a few minutes left.
Let's see. We have to bring him in. So let me see. Let me find him really quick. He is. Let me just bear with me 1 second. Andre, there he is. I just skipped right over.
Do we have any questions, Dale?
Well, you know, you answered the gold.
Okay.
Someone was saying, I wonder if it's possible to access the webinar at the end of the live session. Yes, on our YouTube channel. Any questions for Grega, Dow Jones?
Actually, I said about this 61.8%, how it's important. I posted this chart on Twitter. It's about the Bitcoin. Okay. Actually, you can see that market always respected on a pullback to 61.8%. The first drop that occurred here at the end of 2017, then we have seen a retracement of 61.8%. Then again, it occurred here in April through May for 61.8%. Then again in July, in July for 61.8% once again. Then again in August for 61.8%.
That's amazing.
And now we hit again 61.8% in September. Now we are just slowing down. So it's really.
So if we get above 61.8 this time, Grega,
yes.
If we get above 61.8 in this little quiet dormancy stage it's in, that would be a change of character that we may be able to read into it that it's going to be right to get long if we take out 61.8 here.
No, probably then I would still be focusing on this 61.8.
Okay.
On that one, which
right.
was one back. Okay.
Got it.
So, but overall, I just see Bitcoin consolidating here. Clearly, it's a triangle formation, and if we consider that the previous cycles are bearish, actually from 2018 highs, then we just, of course, breakout can be anticipated to the downside.
Maybe the blockchain code is written at 61.8.
It must be
better pi.
You know, hey, so I know this is more theoretical than anything, and I've said this a couple of times regarding like Bitcoin and Ethereum. Look, I've got a Coinbase account set up. I'm ready to go. That doesn't mean I'm buying anything right now, but I do believe that there is some sort of validity well, there's so much, I don't know if validity is the right word. There's so much money being put into the crypto space on an institutional level that I doubt prices are going to, you know, go to zero. Let's put it that way. There is going to be some sort of bottom that forms, and I don't know if this.
So you think that cryptocurrencies will stay here?
I think they will stay to a certain extent. The parallels between the crypto market and the internet boom are very similar, and I believe that, you know, out of the internet boom, Google rose, Netflix rose. You know, there will be winners. There will be winners in the crypto space because there will be some sort of use for this technology. How low the cryptocurrencies go, and which IOCs, is it IOCs or ICOs, IOCs survive, that's to be seen. And at some point I will buy some cryptocurrencies. I don't know when that will be, but I will at some point. I think I'm prepared to do so. So
of course, now when this crypto mania is clearly has come down, I don't hear anything about Bitcoin anymore on radio station, local radio station, not even on TV so often. So it can be a time coming when, you know, traders like you could wake up, because there are still some of traders who are involved in this market, but obviously still too much for this too many of them for this market to bounce. Okay, so
yeah,
probably market has to come a little bit lower, maybe to clear them and put even more fear into this cryptocurrencies before we may actually form a bottom. You know, everything is psychological oriented. It's the same thing like it was in December highs, you know, when everyone was saying that we are going to 50,000 to 100,000, whatever. So now when we will see a next breakout, you have to see people saying this Bitcoin is done. And when you will see this, it may be a new psychological cycle that will actually cause this turnaround.
And I 100% agree with you. Actually, it's something that we waited. It was last fall when we're like, look, you got to let the market really bottom out, and thank God, you know, we felt that way, because now the market's in process of doing it. The timing is always going to be really the issue at this point, but I still think there are there's plenty of fear to be instilled in the market at this stage. So I'm still waiting. But anyway, hey, I know Andre's here, and Andre, can you hear us? Hey, Andre, how are you?
Let me know if my sound is.
You're perfect.
Fine, okay.
You're perfect. You're perfect. Grega, hey, I want to thank you for being here. Dale, did you want to say any last things to Grega?
Nice Zorro short on Bitcoin.
All right. Grega, thank you so much for being here.
Thank you, next slide.
And let's pass it over. You got it. You got it, Andre. And Grega, thank you again for being here.
Thank you. My pleasure.
How can I share my?
Yeah, here. Do you have it?
Not yet.
I'll pass it to you.
Yes.
Okay.
Okay. You were talking about, I'm sorry, you were talking about euro dollar, and this is a weekly chart. And I trade behaviors or patterns, or I try to identify inside the market those specific behaviors. So this is a weekly chart. We are trading above the 200 media average, and we are trading at the golden ratio. And this is also the market has also completed a specific sequence, which is the 5-0 sequence. So, and we are facing, actually, in my point of view, we are facing inverted heads and shoulder. Probably we are facing an inverted head and shoulder here. But let me talk about. I'm not sure if you can hear me. Can you, Blake?
You sound perfect.
Okay. So the market has found resistance above. So we have a top, and that top has been printed at 161.8 extension from this previous swing, which has completed the shark pattern that I mentioned at the completion point. For those who are following me deeper, this is the shark pattern printed at 161.8. So by default, the shark pattern will search for the 50% retracements. Actually, we are not trading the golden ratio. We are trading the 50% retracement, a few points above the golden ratio and above the 200 media average. As we can see, the media average continues pointing down. So we're still in a bearish strong major momentum, but it can change, obviously. And for that to happen, we need to find a specific pattern behavior or a reversal behavior. So also Blake and Greg, and I believe for those who are following ForexAnalytix, you are already familiar with the head and shoulder on a daily time frame. We can see that on a weekly time frame also, but we have this reverse or inverted head and shoulder information above our neck zone. So if this is the right shoulder at this point, I doubt it. What the market has completed also, and let me delete this shark pattern because you are already familiar with that. What the market has completed is the 5-0 sequence, which by default will offer a bounce from the 50% retracement. So we have the shark pattern completed at 161.8. The pattern has searched for the default targets at 50% retracement, and we are now facing one potential inverted head and shoulder, which can force the price to search for new highs above those highs. So the most recent one. So we are also familiar with the 38% retracement from the previous and most recent top. So the market has already filled some criterias by default. So we have a bounce from the 50% retracement from all this bullish momentum, a bounce from the 50% retracement that has searched for, reached the 38% retracement. So if this inverted head and shoulder fails, I can see euro dollar sinking and searching for previous structure resistance and support zone. Okay, previous structure resistance, previous support zones, and that will throw the price below around the 88 and the 78% retracement for sure. Let's just measure.
You know, that's the beauty, Andre, of ForexAnalytix is a scenario you're painting if this right shoulder holds. It's similar to, or almost exactly what Grega was saying.
Yes.
So
yes.
So I mean, the fact that two different methodologies are pointing towards the same potential outcome is, maybe we go
No.
119, 120, and then down to,
yes.
yeah. I mean,
Sorry,
that's the beauty.
sorry.
So you
No,
have
it's
confluence.
great. Yesterday, one person has asked me something about harmonics and if I'm trading only harmonics or if I support my harmonic trading based on other technical approaches. But beside one harmonic, there's obviously something else. We are trading a default projection for a triangle or for a flag, or we are trading a default projection for a head and shoulder that will complete the specific harmonic pattern later. There's something else. One harmonic pattern it's only a way to see the market, nothing more. But there's obviously at the same time, if you are a Forex, for those who are here for the first time or learning the markets, which I invite you to join us on ForexAnalytix. But for those who are already subscribing, last week I pushed a trade with Blake, different technical approaches. And we both reach our targets. So different technical analysis will guide you into a more stronger projection, if you want to say like that. But yeah, it's interesting to see different approaches pointing to the same direction. But trying to resume here my previous thoughts, we need to wait for the breakout of this structure in order to validate the this small bearish momentum continuation or not. And we are now facing this technical inverted head and shoulder at the completion point of a default 5-0. So, which by default I don't want to get bold, but by default the pattern will search for the previous structure resistance. And if you want to use a trend line, you can see the 50% retracement or eventually trading a few points above. And if you use the wicks to measure to draw your trend lines, you can see a few points higher. So the head and shoulder formation also, the right shoulder formation also can extend, and by the manuals, not by default, but by manuals, it can be printed at 78% retracement. So it's not usual, but it can extend into a right shoulder. Obviously, it will change a little bit the configuration and the shape of the pattern, but it's possible to see a right shoulder formation, 78% retracement. So I'm not seeing that happen at this point, but let's wait and see. But for now, we have the shark pattern at default targets. We have the 5-0 sequence that makes part of the shark. Every time we see a shark pattern, we have achieving targets. It completes the 5-0 sequence, which can provide us a new entry for a buy setup. We have also, and for those who are sharing, for those who are subscribing for ForexAnalytix, we have also a daily pattern printed above, printed below actually, and which has already reached the default target at 38% retracement, as I showed you before. So this is my view for euro dollar. We have the next zone above, inverted head and shoulder in my point of view, and let me change into Dixie, because we have 7 minutes before your interview, I believe, Dale. No?
That's correct.
Okay. This is dollar index, and I see things a little bit different for that head and shoulder that you have talked about before, Blake. So I see a diagonal or a ascending neck instead of that horizontal neck, and I see a breakout of the neck and a false breakout and a push above. And this is my interpretation of these heads and shoulders, because if this is the left shoulder, this is the next zone. Unless we consider this as the next zone, which I will not take in consideration. But if this high from 19th July, if this is the left shoulder, the market can be printed now, the right shoulder. We are very close to the 78% retracement above. This is printing also the cipher pattern. We have here a bearish cipher pattern at 78% retracement. Obviously, we search for something at this zone. We are trading above the previous structural resistance also, so nothing will grant us that the market will not find support at that previous structural resistance and fail from here. But obviously, searching for this previous structural resistance will break this previous candle, and eventually it will force the price to come down.
Andre, what pattern is that you're showing there on the dollar index?
This is the cipher pattern, and let me try to measure that for those who want to get a little bit deeper. So we have a 3 waves structure. This low should search for the 127 extension from the previous swing. So the market has failed the 127 extension just by a few points, I believe. Yeah. And then the market needs to search for the 78% retracement from all this bearish momentum. Okay. So I need the price close to this level. And for those who are familiar with RSI behavior and price structure, we have also the third top here on RSI at divergence. So I'm not sure. I believe Dale is an expert trading the 3 drives pattern. I'm not so sure if you are not facing one at this moment.
Yeah, I think you are actually. We are facing a lot of strength, and yeah.
I will not get surprised if we see a new push to fill that 78% retracement. And obviously we are facing a 4 hours time frame. This is, well, let's say a short-term position here that will search for the 38 and the default targets, the 38 and the 618 and the 618 retracement. So it's nothing more than that. We trade based on the fibs, so 1 and 2 targets. No,
right.
So this is. But again, I'm not so sure if we are now facing that right shoulder. Well, let's see. I need the price a few points above to consider this as a bearish pattern, because the pattern will get completed at 78% retracement. And here I can't. It's just a few points, but I can't.
The 96.30. 96.40, 78.6, Andre. All right, thank you.
96.31. Yeah.
All right, beautiful. Write it down.
This is the cipher pattern, and let me finish, because I have only 2 minutes. I have a few other charts, but I will finish with gold, with silver, and let me try to show you this chart. So I'm sorry, because I was not able to find the clear charts for the bullish 2618 that we were facing on ForexAnalytix that I was sharing for silver. So, and let me jump into the real live chart.
Wow.
It's a little bit confusing here. Let me try to show you that. So, and let me clear the charts. So this is our technical double bottom. I believe everyone can confirm that. We have the close price of the first bottom retested with the second bottom and closing above the previous one. So this is for me a technical double bottom. We have a shape. We have the perfect shape, a triangle shape, a V shape between those bottoms, and we have a broken neck that has printed a major resistance or strong resistance, and then a fast or a stronger or a deeper pullback again. So I will try to let me show you again all this mess. Between all these mess, we can find a few interesting setups. So this is a double bottom, broken neck, resistance, and the pushback to the golden ratio. So this is the default, and those who are subscribing ForexAnalytix, you become familiar with this setup. I believe, I'm not so sure, but I believe I introduced the 2618 inside the ForexAnalytix community. So this is the double top or the double bottom, followed by a pullback to the golden ratio. So at this point, we have a reversal pattern. This is a double bottom, validated with a broken neck. So we already know we have a reversal pattern inside the market, which should force the price to change the trends. So, and the trend is bearish, as you can see. That pattern should force the price to change the trend. So we expect the bullish momentum to be presented after a broken neck. So as soon as we broke the neck, we assume the market will keep trending higher, and we need to wait for the next pullback. So the next pullback is a resistance above the neck and the golden ratio pullback, the retracement to the golden ratio. So as we can see here, and I shared that chart on ForexAnalytix, we have the market has nailed the golden ratio, and then it has searched for the default, I will call it a default ABCD pattern because it's a trend continuation behavior. So from the golden ratio, the default target is an ABCD pattern. As we can see, the market has filled that pattern. And later, at 88% retracement, the market has also completed that bearish pattern at 88% retracement. So at that point, I also shared that chart on ForexAnalytix, mentioning, okay, be careful, because by default, those bearish patterns will search for the 38% retracement. As we can see, we have also an ascending structured trend line, which is acting as support. Yesterday during Asian session, I was seeing this silver putting some pressure above this trend line. I was expecting, okay, I have my stops below. I need to wait for a breakout of this structure. If the market breaks this structure, I need to get out from this trade. And the market has also found a nice support here. So and let's the market has completed the cycle.
What's your ultimate target for this cycle that we're in silver, Andre?
So I'm engaged. I engage at the weekly. I engage at the weekly time frame charts. So I have a 38% retracement from this previous swing. So I have my target at this red line at 1537 is my target.
Okay, and possibly 16.
And possibly, yes, and possibly if the market violates this zone, I believe the market can trade higher.
Thank you, buddy.
Yeah. Okay. Thank you too, Dale, and thank you all for being here and for your interest. And I believe the best choice you will make is to subscribe our community and participate inside our chat room. I believe I need to get there more frequently, Dale. I know I need to go into the chat room to get familiar with all the community. It's not being easy for me, but
Bob Brewer is also congratulating you for your pattern and play in the DAX that you're up 3% on.
Yeah.
Okay, buddy.
Thank you.
All right, I'm going to bring. You're very welcome. Thank you, Andre and Grega. God, what a power-packed seminar. Oh, no, it's a webinar. See, seminar. Seminars in person, right? And thank you, Blake and Adam. I know you're ready. Looking forward to getting your views on, here we are in scary October. Let's see. So the controls are now yours, Adam. Welcome to Face with our investing.com background. The Globe and the Mail. Hello, Adam. How are you, my trading warrior brother?
Doing very, very well. Yeah.
Yeah. So, what do you have up here? Is this your newspaper you read every day?
Yeah, sorry. That's the Globe and Mail. Hold on.
Okay. Is that a Canadian paper, right?
It always seemed, yes, exactly. Just reading the news there. Get that out of the way. I don't know why it always wants to show that screen. There's some charts there, I guess. Now.
Yeah, we have your charts up. So I'm not sure what's really on your radar. I did see a tweet from Forex Live about how all the stars, hey buddy, all the stars were aligned for US dollar yen.
Yeah, exactly. Yesterday, I got my shirt on for my all-time high for the stock market today, so just check that out, I guess.
I thought it might be a Tilray, that Canadian cannabis stock that you got.
Oh man, that was something else. The runs that they took.
You'd have to put the in there all the time high.
Oh yeah, I mean it was like Bitcoin. I mean, you're just lucky to see a few things like that from time to time. I guess it's something every year going just crazy.
How come I'm always watching those things and I have to make the tough money grinding out 50 pips? People have 500% returns.
I had some shares of Tilray. I think I had some at 70. I sold it at 115. And when it's never enough, right? You buy some. I mean, it was real. In hindsight, you say, well, I didn't pound $250,000 into that and make 10 times my money.
Because you're not naive and greedy. You're a pro, and you know that's the exception and not the rule.
Yeah, in real, you make a few $1,000s, and you
anyway,
realize
I think you have to be naive to ride those parabolic moves, because if you've been in the business for a while, you know how parabolas end. So here we are in scary October, Adam. I mean, about 3 weeks from Halloween, and I start worrying about monsters and goblins and wondering what October, your tea leaves, your seasonals are saying here, buddy. For October, what's top of the list as far as performance?
Sure, we want to talk about seasonals. The US dollar in October, November combined is the best 2-month period for the US dollar index. As you can imagine, the dollar index is pretty heavy weighting on the euro, so it's a tough time seasonally for the euro. I know you guys were just looking at that chart as well. So that's one thing that comes in. It is a good time for stocks though, and it's seasonally right through the end of the year is that October, November, December kind of rally for that market. I mean, like I said, bonds is a very interesting one.
Yeah.
Dollar. I mean, we got a little package. I'll put up the link there after. It's got a few more highlights on it about the seasonals. But gold, it's a bit of a weak month for gold. That kind of continues through year end as well, and then early in the start of the year is a very good time for gold. And last year that crept up a little bit. We started to see more gold buying in December. So I think if gold gets washed out, I know it's bounced a little bit, but if it gets washed out again or it finishes near the lows here, I think there is something probably there. Maybe that kind of feeds back into the inflation story. But right now, anything that's priced in US dollars is pretty tough to bet against.
Oil?
Oil is weak through year end. I think the problem right now is you've got this oil, all the commodity currencies are weak as well. And I think you're seeing that in the Australian dollar and the New Zealand dollar. Obviously, the Canadian dollar is a little bit stronger because of NAFTA. However, that said, I'd expect more Canadian dollar strength than we've seen, but it's just run into a wall of US dollar buying. Saw this battle yesterday in dollar CAD. Actually, I got it up here.
Got it.
If you saw it, kind of this is in the middle of the chart, and it kept trying to fight its way down because the US dollar was really strong and it popped, and then you get kind of pushed back down to low 128s, and then eventually the dollar just won out, which it was incredible the move up in yields and the strength in the dollar yesterday. And sorry, just to tie up oil, it's a poor time, but you have the Iran story, and I think that you just can't overcome that right now, at least until November 4th or 5th or early November when Iran sanctions kick off. And I mean, the oil does seem to be coming out of the market. And that's kind of just a trend of this. I mean, the seasonals are really just one piece of the puzzle. and they certainly don't overwhelm anything else. It's again, it's a rough month for sterling. You know, it's not particularly strong seasonally, sensational for any real trade that I could find, but sterling is a little bit on the weak side.
Except
That's
equities.
it. You know, it's all, if anybody's been trading sterling out there right now, it's, you just get caught out on headlines. I mean, you have to have your stops, I don't know, plus 100, 150 pips outside of where you are, because that's just the noise on any given headline.
Yeah, you get these news bombs dropped in there, and it all happens in a heartbeat. Do you think, don't they have some type of deadline there too as well, Adam, for trying to come to some resolution of whether there is really a Brexit?
Yeah, we'll check. I mean,
You got another shirt? You have a different shirt for Brexit? Oh, there you go.
What would I write down? I mean, like deadlines. I mean, like, how many NAFTA deadlines did we blow through? How many Greek deadlines did we blow through? I think the political deadlines are very difficult to really know. I mean, it turned out, I guess, we've blown through so many deadlines on NAFTA that everybody thought the end of September deadline was just another one we were going to blow through, and then that actually turned into some kind of real deadline. They got a deal done. You know, there's so much talk.
How does your citizenry, I know I'm breaking a little rule here, getting political, but after all the bashing that, you know, Canada received from our side of the border, how did they feel about getting involved in this deal, which isn't really that much different than the original NAFTA, according to my understanding?
Yeah, exactly. I mean, they're calling it NAFTA 2.0. I call it NAFTA 1.1. I mean, yeah, there was a lot of worry about, you know, dismantling dairy, and in the end, they gave America, what, 3.5% of the dairy market, which is, you know, I don't think anyone's too worried about it. End of the day, it's like everybody's a little, I guess, just not embarrassed, but like, in hindsight, like anything that you worry about, really, you spend so much time worrying about something, and then it happens and it moves on, and I guess it wasn't so bad. It's like any time there's a flare up in the Middle East, or, you know, North Korea a year and a half ago, we were worried about nuclear war and the market got jittery, and then it kind of passes like, yeah, we really shouldn't have been that worried. Or Ebola.
Yeah, now it's a bromance. I mean, there's actually the word love being used between the leaders. Yeah. And that's
I guess that's politics,
it's a beautiful thing, isn't it?
It's I mean, I think the Canada story, if you want a take, is really underrated right now. What's about to happen is America and China are having a real trade war, right? Tariffs are going to go to 25%. Now, Canada and Mexico are trading freely with the United States, no tariffs, no real worry about tariffs except for steel. And so American companies, instead of buying things from Chinese companies, are going to be buying them from Mexico and Canada. And it goes both ways. I mean, China also buys a lot from the United States, and those orders are going to be going to Mexico and Canada as well. So Canada can do very, very well, because I think this is going to be a long-term issue. And, you know, there's something, you know, there that Canada isn't really overlapping with China, but if you look at the categories that are tariffed, China does right now, with what's under these latest tariffs, about $200 billion in trade. Canada, in those exact categories, does $158 billion in annual trade. So there's a very strong overlap in a lot of this, and I think there's a lot of market share that Canadian companies can take, and that's going to be an inflows in the Canadian dollar, stronger Canadian growth, and higher Bank of Canada interest rates. So,
Adam, I was wondering whether or not the real risk is not the price increases of tariffs, but because people are jiggling everything around, that there could be problems with the supply chain that creates potential shortages of certain goods, because everyone has to kind of change their whole model to try and get around this.
If you read, you know, electronics especially, if you read the latest ISM reports, and yesterday's services report was sensational, but in that there was an electronics, I guess it's a services report, but there were like electronics, they had a lot of electronics within their supply chain, and they were talking about just that. There was all kinds of stockpiling going on, and shortages and delays, and I think ultimately the business can get squeezed on that probably. You lose some profitability, but I don't know if you lose economic activity because the demand's still there.
Okay.
And but that is certainly a risk.
Okay, so I think we've covered most of the currencies and commodities, stock indexes. This move in bonds that's really accelerated here, Adam, is this, you know, the continuation of a trend that could take us to 4% yields, or could we be facing some exhaustion in yields here to where they come back in and maybe the end pulls back with it? Okay.
I popped in, and I mean that goes all the way back to the 80s, and I mean it's this multi-generational really bull market in bonds, so that means lower yields,
Right.
and it looks to be over now. That obviously people have called the end of the bond bull market a million times. We killed on it, but I mean that's it.
Because it took 9 years for the bottom of yields to take place. Yeah.
This entire real decade that we're in right now has been, you know, it's kind of sideways choppy, and that's like, you know, a major bottom. I guess that's how it happens.
Yeah.
That
would measure.
I think yesterday was really telling. I mean, those moves in bonds, I mean, 12, 13 basis points is a huge move. It was a big volume day. It was on news, on the ISM numbers, on the ADP numbers. Tomorrow is non-farm payrolls Friday, which is just, you know, it will be confirm all of this if wage growth is strong, even if jobs are strong. I was just reading a SocGen report. They were talking about, you know, the correlations with ISM, and this would imply, you know, 500,000 jobs, and the ADP was strong as well. Now, no one's really looking at that, but if you were to get in the high 2s or 3, you know, the Fed is very, I guess, complacent about inflation, and they could start to get a little bit worried. And I think then you get a massive repricing of bonds, of the U.S. dollar, and things start to happen very quickly.
Well, looking at this monthly chart, if you consider the range that we've had for many years between 3% and I don't know about 1.4, 1.5, it measures 4.5, and we've just broke out.
Yeah, I mean, Jeff Gundlach, who's the bond king, he's saying this is two closes over you know where we are now. I can't remember if he was talking about 10s or 30s, but you know, barring some kind of major reversal today, it's going to happen. I mean, and he's been talking about that, I think, for months. So there are a lot of people watching these levels in bonds. And if you look at dollar yen, I just love the way it's trended up nicely, right?
Yeah.
You know, the best trends are these ones where it's kind of like 2 steps forward, 1 step back, or it's more, in that case, it's more like 3 forward, 1 back. Today we're having a little bit of a step back, but we did earlier this week as well, and then it went up yesterday a full cent.
You have any kind of long-term objective for where U.S. dollar yen, if yields are going to 4%, where could that put the yen? Back in new highs?
A weekly or monthly here. I mean, the first number you look at is
you got a lot of good exercise doing interviews with me.
I got to
running.
Elsewhere.
All right, so my goodness, you know, maybe we could.
You look at that, and I was looking at dollar yen in the short term has something. I mean, that you can just see this triangle shaping up there, and it's going up or it's going down. And if you want to put a measured target on that, you're looking up to the top of that in the 140s. Which, if you're getting to 4.5%, the Bank of Japan, you know, they'll drop yield curve control probably along with that. But how high are you going to go in JGBs? The Bank of Japan owns most of them. So you're talking about 400 basis point plus carry trade still, which is, you know, that's the kind of thing that gets you to 140 on an overshoot.
Right.
So it's
interesting.
You know, and I think those are numbers we should be talking about. It sounds outlandish when you're at 115, but if the bond market is breaking out, and you can't just say, well, the bond market is breaking out. It needs to go with economic data. but you know, the people are starting to think differently. Amazon, bumping wages. You know, I think one of the big battlegrounds in the next presidential election will be a minimum wage increase.
Right.
You know, and not only that, but I think people are starting to think about asking for raises in the United States. And it does seem to be uniquely a U.S. thing, maybe a Canadian thing as well. Right now, it's pretty strong here as well. But in the bigger picture, you know, there's so much uncertainty around Brexit. Europe is stuck in the mud. Japan has been doing the same thing for 30 years. So in Australia, there's a lot of jitters and worries about housing.
Why don't we talk about a country we rarely talk about, and that would be China. And, you know, when they come out, Adam, and say something like, in this trade war, we will not weaponize the yuan. Now, my experience with the Chinese is when they say something like that, I'm looking for them to weaponize the yuan, you know, and take it over 7. Almost got there today. What's your view on the yuan and how China is going to react? And, you know, you were getting you could tell the intensity of the trade war when they start sending ships right next to each other 40 feet away. And then, you know, we're going to have some type of show of force after the sanctions go on Iran. They're planning some type of global naval exercise. Do you think that China is going to continue to suffer? Or because of the history of China, where I know a lot of people have been lifted up in China from poverty, but most of the country is still used to not living with a lot. Can't they handle a trade war better than we can?
Yeah, remarkably so. Where the story is, everybody seems to have handled it okay, and I would argue that China, you know, they have a political structure that will allow that, right? Whereas in America, I mean, you have to have so many people on board. But that said, there does seem to be appetite in the U.S. for a fight as well. You know, and it's not like Canada or NAFTA where U.S. really isn't asking for that much. I mean, the U.S. is asking China to kind of completely reorient how it does business. And we don't really know what line the United States is drawing. I mean, right now they seem to want to take the fight to the WTO to kind of rebuild. They're asking for things that aren't going to be easy to deliver. So we're not at the point where you can even see the end of this. And I think there's a lot of natural selling that can come into the yuan as well and weaken it if you get these outflows from China. And, you know, as much as there's talk about manipulation and moving it, I mean, there's people in China just want to get their money out. Yeah. And that, you know, should they have to fight against it? I mean, the yuan should be falling. The stock market there is down 23%. The S&P 500 is up, I don't know, 15% and hitting all-time highs. So there's a divergence, really. China's slowing down, the United States is picking up, and that should come through the currency, but it's so political at the same time. I mean, Trump would be tweeting about it in a day. So again, you can't help but imagine things get worse before they get better.
Well, let's talk about another hot spot. Do you think that the lira, Turkish lira, what's happening there? You know, we had the measures seem, you know, stop the parabolic move of lira weakness against the dollar, but don't you think that could flare up again too? And why do you think things have calmed down there?
Yeah, well, it got so beaten down. I think, you know, this is more of a political crisis. I mean, there's the flows and there's the imbalances, but there's just no confidence among foreign investors in the government of Turkey. And that's fine. There's not a lot of confidence in a lot of governments around the world, but you have a massive current account deficit. And, you know, next time there's, what was it, a pastor is still in jail, yes, I guess, in Turkey. And that, I don't know, obviously that didn't set it off or anything, but, you know, something like that gets back into the narrative and you suddenly start to get jitters again.
Yeah. Well, watch the movie Midnight Express. Pull it up on, you know, Midnight Express. It's a movie about going to prison in Turkey many years ago. Watch that. And we do have one request from a couple, but Forex Gal would be interested to know what you think of the S&P chart, Adam, to wrap things up here.
I don't know how to pull it in. I mean, what else to say? Pull it in.
You did say, you know, the market looks okay through year end. So I'm assuming you have a bullish take.
Seasonals are solid. You know, earnings are coming up. The chart itself, I mean, it's a chart that's hitting all-time highs. You know, I don't really draw extensions or go from there. When something's hitting all-time highs, it's usually going to continue to go up. I mean, the risk is maybe dollar strength or the Fed tightening too much, but you know, you're probably really 6 months away from worrying about that kind of thing.
Okay.
I expect money to flood into the market at the start of the new year as well.
Okay.
But tech, I mean, tech, how much is tech carried here? Netflix is up 100% this year. Apple's up, I don't know, 30%. And that's 20% of the entire stock market rally, I think, is Apple.
Yeah, but Amazon is starting to stall, I've noticed, which
Exactly.
has been
So,
one of the monsters.
I think you probably get some rotation into commodities,
Okay.
other parts of if we're looking at an economic rally, you see retail do well, which isn't necessarily Amazon, but sort of broader retail. I mean, if you look at the hiring plans for retail this holiday season, they're sensational in terms of temporary hiring. So there's, I think, a lot of money to be made in kind of just strong economy stocks, commodities. And maybe some of that finds its way out of the U.S.
And that's a great, you mean, some people will take shots at emerging markets. That's been the big debate, the valuation of emerging markets compared to the valuations we have here in the U.S. And people are saying, well, you know, just because it's cheap doesn't mean it can't get cheaper regarding emerging markets.
Yeah, you know, the Americas, if they're not buying things from China, they'll be buying it from elsewhere as well. And I think emerging market, the narrative on growth there isn't so bad. I mean, aside from Turkey, Argentina, probably South Africa, but somewhere like India, even somewhere like Russia, which is pretty beaten down, a lot of commodities. I think a lot, you know, and the broad economic growth story, I think, is still percolating. Remember, the start of the year was supposed to be global synchronized growth. It's turned into really just U.S. growth, but I think the feeling out there is slowly going to get better, going from the U.S. to maybe some commodity producers in emerging markets, and eventually Europe will get over some of the angst there and do a little bit better. I can't believe how worried the market is about Italy's deficit at 2.4% versus 2%. And suddenly we're shaving 2% off the euro on that.
Yeah.
I mean, get over it. Let them have their deficit if they want to have a deficit. What are you going to do about it anyway?
Great point.
But
well, you know what, Adam?
Wait.
Thank you so much for buttoning up all the markets. So that's your new tagline. And no one can button up the markets like Adam Button. What's the best way for people to, you know, that saw you today or will see the video to keep in touch with your thoughts and your views in the market, Adam?
Yeah, there's some seasonal stuff right there. ForexLive.com. I'm not selling anything here. We're an information website. People go Forex Live. When you see a move in the markets, you see a spike on sterling, like seems to happen every day, we're going to have something on it in a minute max. Why the market's moving, what's happening, what people are saying, some education text, that kind of thing as well. So we're on Twitter at forexlive.com, or pardon me, at Forex Live, and we're at forexlive.com 24/5. Anytime the market's open, we're on top of why it's moving.
Thanks for another crystal clear presentation of the markets, Adam, and your seasonals. Appreciate it. My trading warrior brother, have a great October, and let's do it again in the next month or so. All right, buddy?
Right on. It's been a great start. Thanks for having me, Dale.
You're very welcome. My trading warrior brother, Adam Button, at Forex Live at FX_Button. And that's it for us. Thank you, all our viewers at investing.com and all you face warriors. We'll see everyone for the NFP tomorrow. Okay, so some action tomorrow. We'll see what happens with what we've been talking about. I also want to thank Grega for putting together the jigsaw puzzle for all of us, and Andre continues to, enlighten us with his work, and Blake, great job. He's a natural filling in for Steve. We're all hoping Steve feels better. And that's it, guys. Keep some powder dry. And remember, don't just count your pips, count your blessings. I'll see you guys for the NFP. Adios. Thank you, Adam.